Today on the CEO Barbecue, we're looking for gold in Nevada together with Borealis Mining. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, this is actually not Borealis' first time on the CEO Barbecue. I'd interviewed Kelly over a year ago, but maybe as a refresher, their focus is building a Nevada-centric gold production platform that's anchored by the flagship Borealis mine, which is near Hathorn. And then they also have the Sandman project near Winnemucca, which might potentially soon be going into a PEA, and we'll talk about that later on. They're currently doing residual leaching and have been for a while now, and they're also actively crushing and stacking what is now a 327,000 ton stockpile, with first gold pour already having happened in September, and then a new gold pour from that program as recently as mid-November, like last week, with further pours expected in the future as well, which again we'll talk about. Their self-stated goal is to become Nevada's newest mid-tier producer, and they plan to get there both through the drill bit and through selective acquisitions as well, ultimately targeting a hub and spoke operating model and targeting a production profile of over 100,000 ounces of gold equivalent per year. As you can imagine, that raises a lot of questions with regards to power, water, community strategy, financials, operational challenges, and whatnot, and much more, all of which Mr. Malcolm and I will hopefully be talking about later on. Borealis is listed as BOGO, so that's BOGO on the TSXV, where the average 3-month volume is about 680,000 shares. The stock's 52-week high is $1.81, and its 52-week low is 49 cents. With a market cap of just over 215 million Canadian dollars and just under 129 million shares outstanding, today this is a $1.68 stock with a 50 and a 200-day moving average at respectively 192 and 81 cents, which means the stock is now trading well above both of them, indicating positive upward momentum. Moving on to the share structure, the largest individual shareholder here is Rob McEwen himself at 14%, followed by Eric Sprott himself at 10%. And insiders also own about 10% of the company, while institutions and retail hold the rest together in an almost even split here. Again, just under 129 million shares outstanding, 8.3 million warrants, a million broker warrants, and 6.1 million options and RSUs combined. They bring the number of fully diluted shares to 144 million, meaning an increase of just about 12% in shares outstanding could happen if all the dilutive securities get exercised, which would then result in about an 11% ownership dilution if, that's always a big if, but if all dilutive securities get exercised. And of course, none of this accounts for potential dilution down the road, which, although Borealis is expecting revenue, that's still not unlikely given that mining is a capital-intensive industry. Talking about capital, this is where I normally do a deep dive on their financials, but the last available financial statement on Setter Plus is actually from the end of April this year, so that's almost 7 months ago now, and I don't expect it to be entirely representative of the company's financial situation. Things have happened, broker warrants and warrant money has come in, so we'll talk about that later on, and I'll save you the overview, and instead I'll get an update on the financials from Kelly later on in the conversation. But for this to actually become a conversation, I'll have to shut up already, and Kelly, I'll give you the word here. But first of all, thank you for sitting down with me today.
Pleasure to be here. Thanks, Antonio.
Pleasure is mine. But it's been over a year, man. What happened? Where'd you go?
As you can tell by the share price, I've been busy. I spent a lot of time in Nevada. I spent probably 6 of the last 12 months down in and around the project site, bouncing around conferences. But sorry to your audience that I've disappeared for so long.
Remind me where you reside because you're wearing a polo and I'm wearing like a full sweater and everything, and I'm freezing. You don't seem to be freezing.
I'm not freezing. I'm in Toronto, but it is freezing here, but it's comfortable in my house. So,
Fair enough.
yeah, Toronto based.
Um, Europeans haven't figured out air conditioning and heating yet. We just go with the flow, kind of. But no, fair enough. And it seems like whatever you've been doing is working because again, the stock price is up. You're up over 160% since we last spoke, whereas gold itself is up 50% on the year. GDX, GDXJ, they're up about 100%. So you're outperforming all those. Do you feel like the stock is getting a little stretched here at over 100, at over 200 million market cap, though?
Really, I don't. I love that it's a beast of its own at this point. It trades, like you mentioned, really, really well, big volume. I don't know if you know, but when you first list a company, you can basically tell where every single share is held, where who's selling, who's buying, what house is in, what house is gone. It's completely on its own at this point. We are marketing, but we're marketing with a really good story. And to your earlier comments, there is real growth attributed to the existing assets we have. And people are now looking at what Borealis will be, and not instead of just what it is right now, but what it will be in the next 1, 2, 3 years. And if you look forward, which I think we should in this industry, I really don't think it's ahead of itself. In fact, I think it's just catching up to where it should be going forward.
This might actually be a good point to kind of set the stage for what's going to be, I hope, a long conversation here, Kelly. But what are you trying to be? Like, is it really, a single asset producer, a multi-asset Nevada platform, as I mentioned, a sellable package within 3 years, or what exactly are you building here?
So no to the latter. We literally are not looking to build something that someone will take over in the next 3, 4, 5 years. We're genuinely trying to build a producer. There's fewer and fewer as consolidation occurs, and we're looking to become one that is here for a long time. I think our chairman, Bob Buckin, built Kinross from pre-IPO to I think when he retired, the stock was $39, which it hasn't hit since 1993 or so. So we like the idea of building long life big companies. In terms of what we're trying to be right now, not a single asset producer. We're certainly looking to be aggressive in our growth platform, and that's going to occur through production at Borealis, the eventual build out of our Sandman project, as you mentioned, and we are actively pursuing additional opportunities. So to your again earlier comment about dilution, um, we will most almost certainly be buying other assets in this company, and the share count almost certainly will go up in that process. But I think we even mentioned this in our last discussion, but I don't necessarily consider issuing shares dilutive if you're getting something really special in return for that. So
Yeah.
I'm not sure if that answered it, but those are our dreams and ambitions, Antonio. And amazingly, they're all seemingly quite achievable with what we've put together and where we're currently sitting and the cash position that we have and where we're looking to go in the next few months, if not into the next few years.
I'm glad you added the almost to the certainly part because this is mining. Nothing's ever certain.
Nothing
Where
is
do you think,
Victoria Gold.
Kelly? Where do you think that 100,000 ounces or more is going to come from? Like, is it a, I don't know, a 70-20-10 split between Borealis, Sandman, and whatever else might come on the back of that, or how do you see that? Where's the production going to come from?
So I'll have to give a big, annoying cautionary forward-looking statement advisory to your listeners here because we at Borealis are a little bit unique in our setup at the moment. So our resource at Borealis is considered non-current, non-compliant, and historic. That was part of a 2011 pre-feasibility study. We, of course, have a lot of internal work if we're planning on going into production in Q1 to understand what we believe the existing resource is. And hopefully in 2026, we can get that out to market. And then I can have a much more coherent discussion around the future of mining at Borealis. We also have yet to provide formal guidance, Antonio, to the market, which we will be doing, if not in December, in early January ahead of production. Hopefully we can get it out sooner than later with our internal mine plan and get that to market. So again, we can speak to cash flows in certainty, or at least again, as you said, nothing is certain in mining, but almost certainty. So if you look at where we can or how we can get to that 100,000 ounce number, so we'll use Sandman because that is a compliant PEA study that was done in 2023 that we are currently in the midst of updating. And again, that'll be out before year end on our letterhead. But that shows 35 to 40,000 ounces. That was done at $1,800 gold. There's a lot more mineralization present on that property than what was put into that resource. The resource base for that study was 2021. They did a bunch of drilling in 2022, showed some growth. So that'll be bigger in my eyes than just the 35 to 40,000 ounces over 10 years. Borealis, if you look at the 2011 report, again, with the caveat it's non-compliant, you would see 1.8 million ounces in the measured indicated categories, of which roughly 400,000 ounces of that would be considered oxide heap leachable material. So without having to build a mill or some sort of flotation circuit or an oxidation platform, which could be Albion or there's many different ways to skin that particular issue, but you're looking at 400,000 of heap leachable ounces at Borealis. So relatively comparable asset base between the two in terms of what's readily available to extract using our existing infrastructure. So I'm not saying that's what we're going to be producing next year. In fact, it would not be that high, and our guidance will show that. But we're sort of aiming to get to that 40, 50,000 ounce number out of what we have at Borealis, and ideally out of Sandman. And then in terms of what's next, I shouldn't speak to the assets that we've been pursuing, although some of them have transacted. You can take from that as you will. And they've been publicly announced, but there's plenty of projects that are out there between that 30 to 50,000 ounce number. So if you supplemented what we're looking to do at Borealis with what we have at Sandman, add another 30, 40, 50,000 ounce producer, which, as you know, and following the markets, they trade at a dramatic discount to larger resource bodies. There's an opportunity to build something for very little upfront capital, very little equity issuance that can get us over that magical 100,000 ounce hurdle.
Mm-hmm. That's all
I'm not sure if I answered that, but call it 30, 30, 30.
Yeah, you're dancing as well as possible around that answer, and I understand it has to stay compliant. It's all Nevada though. You're thinking all that growth and going to the point where you want to get to build that producer that you just told me about. You think all that's going to come from Nevada?
So one of the reasons that Sandman was attractive to us was, number one, it's Nevada. It's easy for an investor perspective. We're Nevada focused. The reason that I loved it initially was the capex was low. The capex is low because there essentially requires no infrastructure. It's a small, really quarry with a little heap leach pad. And then we truck all of the loaded carbon from that site down to our existing infrastructure at Borealis. We've got a plant capacity of 60 to 80,000 ounces per annum. It would cost me about 2.4 million US. We've recently costed it to increase that capacity to around 120,000 ounces per annum. So the reason that we'd stick, or we're ideally sticking around Nevada or the surrounding states, is that for very little cash, we have a plant that can satisfy another Sandman size project without having to go down a more lengthy permitting process. And I know you've mentioned at the beginning that we'll chat about permits and all that fun stuff. But one of the harder permits right now to get in the Southwest USA it's called the Class 5 air permit, which deals with the effluent of mercury and off-gassing of mercury from epithermal ore deposits, which is very, very commonplace in basically the entire Southwest USA. We have that at Borealis. We're able to expand upon it. So in just ease of permitting and simplicity, I'd like to have things that are close by that we can truck loaded material from whatever new project is around to the Borealis site and keep that plant humming.
With that business strategy, and I'm going to go into the details on some of the things you just said here in a minute, but with that business strategy, Kelly, what would be the closest analog to what you're trying to build here? What do you dream about?
There's a really cool one that was so well, actually when I speak to institutions, a lot of them are older and have a memory a bit longer than mine, but Glamis Gold was a really fun company in the 80s and 90s. It was before, I'm sure, both of our time looking at stocks, but they built, actually, one of my analysts, Pierre Vaillancourt from Haywood, actually brought up this comp. They built kind of like a constellation software type model where it wasn't about the size of the prize, it was all about the free cash flow generation. And they did acquisitions based on the margins and how much cash they could generate from an asset for as little money as possible. And they were mining, they got bought for something like $4 billion it was either the late 90s or early 2000s by Goldcorp. They had 4 or 5 mines running. The smallest mine was 14 or 15,000 ounces per year, but it was making ludicrous cash. And they had operated a few small mining projects and they all just made money. They were really good operators. So that's a really neat analogy. Another one that I like that maybe got a bit too big and a bit of ahead of itself was i-80 Gold in its inception was a consolidator, but they went big. They had like something like 32 million ounces at one point before some divestments. And the market all of a sudden said, "Ooh, these guys are really gonna." They obviously had a bit of a struggle last year at this time,
Mhm.
and I think it was just the market looking and saying these guys need to raise 3, 4, 5 billion dollars to get this all online. Where our approach is we've only done it once. We've only bought Gold Bull, but in terms of our strategy is looking for things that aren't going to blow up our structure, that can help us maintain. Like as you mentioned, I own 4.5 million share, 4.3 million shares or so, and I'd like that to stay a very meaningful position. So
Mhm.
things that can um, grow the company, but keep our structure alive and keep. I know a lot of companies out there as they grow, their market caps grow dramatically, but the share price does that. If you look at Cisco, for example, who is a wonderful performer, and not knocking them at all, but if you looked at the 10-year period from windfall through to before the sale, the market cap grew dramatically, but share price kind of hovered at that $2, $3 round or range for that whole band. So I'd rather see things that can grow the share price rather than necessarily, ideally, they both grow, but share price and market cap can grow in tandem.
Dilution, definitely the silent killer, and something that I do want to talk about. Well, let's maybe talk about some of the specifics and how you go from where you're now to where you want to go or where you want to get. And I'll start
Yeah.
with the financials. Again, your last financial statement is a little dated at this point. Where do you foresee 2025 revenue to be at?
So just as an aside, our we're on a funny year end. We're off calendar year. We're also off quarter. So our year end is July 31st. So our annual financials are due to be filed next week.
Okay.
So we have our committee meeting on Wednesday, and they'll be filed essentially that day or just thereafter. But as you mentioned earlier, they're not going to be super reflective of the current situation. Even from July to now, we've done a lot financially. Or sorry, I'm jumping all over the board here, Antonio. To your earlier question, where do we see revenue looking like next year? So again, I'm going to put my forward-looking cap on. We haven't yet provided guidance, but let's do a hypothetical, and we'll do a reasonably accurate hypothetical. And let's say next year we aim to generate between 15 and 25,000 ounces of production out of Borealis, which is a pretty easy starter. Kind of get the ball rolling. We've started with our stockpile crushing. But again, hypothetically, let's use that 15 to 25,000 number. And we will put out guidance in the coming weeks. And let's use a hypothetical for simplicity purposes, $2,000 all in sustaining cost, which is quite reasonable, if not on the high end for a heap leaching operation. Um, that would result in a very simplistic using 4,000 ounces, $4,000 an ounce US, 30 to $50 million US in free cash flow. And revenues are double that essentially on a very simplistic hypothetical basis, which again is not too far off from where reality will come out
Mhm.
in the next few weeks. The caveat to that, Antonio, and something that your listeners should be aware of in heap leaching, you actually have quite a delay from when you stack your ore onto a heap leach pad. So let's use 20,000 as an example. We'll be putting 20,000 ounces onto a heap leach pad in that hypothetical example. You're going to have, and you see this when you look at financials, they call it the WIP, which are the ounces that were placed on a pad that will be produced in the next quarter or the following quarter. They get accounted for as working capital, but they don't show as revenue. So another annoyingly difficult caveat, but that's the nature of heap leaching. It just there's quite a big residency time from when you actually place your ore from the crusher onto the heap leach pad
How much is that for
to.
you, by the way? Is it 90 days?
So in absolutely, that's a great question. In a lab, it's 90 days. In practice, it's much longer because we're operating on older heap leach pads. So if we were placing our ore directly onto the base of a brand new pad, it'd be 90 days flat. What we're doing right now is we're placing on 100 plus feet of previously leached material. So we're treating that ore with cyanide above that what can be a dry portion of the heap leach pad. So it takes a while for wetting to occur. You also get some mixing and dilution from the previously mined material. So in practice, call it 120 to 150 days from when ore is placed through to when we actually get our targeted 70 plus percent recoveries. But the cool thing about heap leaching is we say we have 70% recovery, but through the years, as long as we're continually adding to the pile, the ore underneath will still continue to deliver gold. So in practice, your true recoveries in a heap leaching operation, if you're continually applying solution, typically are upwards of 10% higher than what you announced to the market.
How's cash for you right now after a warrant exercise? I believe what you had there, first pour in September. Yeah, how much money do you have right now?
Looking good. So we're fully funded through our restart. We announced that we raised 9 million Canadian from the proceeds of some exercises of warrants. We've had additional warrant and some option exercises since then, non-insiders, but by some consultants. We're in a great position. Again, forward-looking, but better than call it 12 million Canadian with revenues coming in. Like we just announced last week or the week before that we had poured another bar of gold. That is at the refiner. We've not seen revenues from that. We'll see additional revenue coming in the balance of this calendar year. So we're comfortable. We're in a really, really strong position.
What does fully funded mean for you? How much money do you think you're going to have to spend before you're, operating at that capacity that you told me about next year?
So in terms of genuine pre-production capital to restart the mine, there is none. It's fully ready to rock. We've you'll see when we put out our statements, and I advise people to take a look at our MD&A. We do a nice job discussing the operational upgrades that we've done. So I can't really speak to those in totality until they get released next week. But we have over the past couple of years, we've spent a lot of time and a lot of money and brought in some great consultants to get the plant fully, well, obviously for pouring gold, it's fully operational, but get the site all decked out. So it's really zero pre-production capex. The money that we will need is essentially working capital. Working capital. It's a bridge between the arrival of contractors and that gold coming off of the pad into the plant. So there's about a 2 month gap between when that occurs. That is satiated by our stockpile revenues, which will continue into this process to lessen that blow. Um, but we'll probably go through about 5 million US in a working capital deficit in that startup period. But that's plenty of we've got plenty of money for that on hand at the bank right now.
Right. Okay. And so far you've done what, just two pours, so September and mid-November, right?
So November 5th, we announced it about a week later. We had a planned pour because we do a regulatory, it's called a stack test, to speaking of that class 5 emissions, class 5 permit for emissions testing. That was scheduled for November 5th. So we've done two pours from our stockpile crushing exercise. We've, as of today, put another big chunk of our crushed material under cyanidation. So we should see at least another one, if not two more, meaningful pours before year end.
Right. Okay. Those two pours that you did, they were different in size, I believe. How come?
The first one was just when you look at heap leaching and speaking, there was a great comment about the 90 days. When you look at the actual recovery curves, it's a pretty abrupt ramp up and then it tails off gradually. So that was the result of the initial pulse of cyanidation going through the rock. We were also testing. We're playing a little bit with how much gold we load into our carbon before we strip to maximize efficiency. So for your listeners that it's new to me on some of these things. So when you're running a heap leaching operation, you're running a cyanide solution through your ore. That's basic. But what happens with that cyanide solution is it goes through a carbon column that acts like a Brita filter and extracts the gold and it binds to carbon. So there's a maximum loading capacity of that carbon, how much gold it can effectively accept. So we tried running it up to 120 ounces per ton, actually 130 on one of our carbon columns, and we found that our stripping efficiencies were a little bit less than we'd like them. So the second round of stripping, which we did for our second pour, we ran it with a slightly lower total gold content, and we were quite pleased with the results. So we strip essentially 5 tons of carbon. We get a certain amount of precipitate and or dry precipitate, and that's the result of the pour. So it's typically out of our plant with the setup that we have. We either do a bar and a half or a bar, depending on how the strip goes.
But was it under the same conditions, though, like leaching time, reagent, same everything, just
Same
different
everything.
rocks, or where the differences in the process as well?
That was from, and if you look at our presentation, we've got a slide that shows our heap leach pad and the crushing. I think it says crushing spread August 2025 at the on the caption of the photo. You can see some vegetation growing on the side of our heap leach pad, and then a base. And then if you have to look a little bit closely, but at the back of that pad, we call it a finger, another level, and that's crushed. That's under cyanidation. And that material is where those first two pores were derived from. You can also see in that image a much higher pile occurring on the right-hand side of that image that is now dramatically advanced, and that's what's under cyanidation. So the first two pores came from the exact same rocks, under the exact same pH conditions, same cyanide conditions, no change whatsoever. And it's just the nature of heap leach residency times. The first pour will always be a bit bigger and a bit juicier. The second one, you get more residual material, but overall the gold grades were great in both bars. We're very happy with how they turned out,
Yeah.
and the processes are running very well.
What were the grades of the pot before leaching?
We haven't, I don't think we've announced them, but it's not overly material. Somewhere, like the one we just did was somewhere in the range of 45 to 50% gold. And about 30% silver. The one before had a higher silver content and a comparable gold content. So quite meaningful. What we did when we did our first few pours was we would announce the doré, we'd announce the grade of what's called a pin sample, which is meant to be representative, but in reality, it's like a little bit misleading. I'd rather just announce that we've done these pours and let the financials speak to the actual revenues, because once you go to the refiner, there's always heterogeneity within the gold bars. If you think about um, even just a rock, and it's all starting from the same source magma. In principle, it should all be the same, but there's different portions. If you look at a granite, that are going to be more quartz rich, feldspar rich. So we did away with that process for that reason. But yeah, good gold content. You can expect about 50% gold when we announce our doré bars.
From the current pile that you have right now, yeah, how big is it? How many more pours do you think you can do?
Lots. So we had 327,000 short tons, as you mentioned. The grade on that, I believe we've announced it. It's again heterogeneic pile. But we did a 10-ton bulk sample ahead of mining, where we took a backhoe and basically did scoops across the whole pile, trying to get something representative. Showed around 0.55 to zero point 0.6. So if you worked out the potential contained ounces there, you'd see 4,500 to 5,000 or so in that pile with a 70-ish% recovery. So 3,500 to 4,000 ounces would be recoverable out of that material. We have crushed roughly half of it so far. We had a bit of a hard time at the outset. At the very beginning, crushing was going very well because the material on the outside was nice and dry. As we got deeper into that stockpile, we did encounter a fair bit of clay material, which slowed things down. And we can get into that as one of the potential causes for concern or delays, but it's one of the only real geological things that we're working on identifying a solution for. But the clay did slow things down. So at the outset, we were crushing 3,500, 4,000 tons a day. We're down to about half of that right now. Um, so we'll be crushing into certainly towards the end of this year and maybe into January as well. So we've got 7, 8, 9 more pours to come from that material.
Why I'm asking that, and all the previous questions really about that, is because I'm thinking, how predictable has the process been, or is it gonna be like, how big has the delta been between your expectation of what you're gonna recover and reality with regards to, again, leach time and grades and recoveries and gold to silver ratios as well and so on?
Great question. In terms of recoveries, our team, I'm very proud of, bang on. The delta has been in how quickly this operation would be finished. Initially, we were targeting being done around this time, kind of early to mid-November, when we had just looked at it in practice and in principle based on the met test that we'd done at the lab. So it's been slower just on crushing. The only other thing that was slower than planned was, and I mentioned it before, was the residency time it took, or they call it breakthrough in heap leaching, but the breakthrough from new solution entering the lab. So that took about 2 weeks longer than originally anticipated. But in the grand scheme of things, it's a moot point, because now that we're operating with cyanide, that pad is now saturated with cyanide. So the cell, it's this funky, really a heap leach pad is kind of like a living hydrogeological phenomenon where there's currents, there's shifts, there's paths, there's preferential paths for fluid. That is now saturated. There's cyanide within that saturated fluid. So we shouldn't see a gap when we start placing newly mined material
Mhm.
onto onto the pad.
Right. And you're still, you mentioned a couple of times, but you're still fully expecting to be up and running, a full restart, if you will, in Q1 of 2026. That's still what you think is going to happen.
Yeah, we had So the stockpile crushing, even though, like I said, it's been a bit slower, it's been excellent to iron out the kinks. We've been adding to our team. We've got some really, really great operators on the ground now. Um, we had, I think we put it on Twitter or X and LinkedIn, if you're viewers, last week or the week before, a snapshot of what's called a contractor job walk, where the different contractors bidding on the project come to site, get their final look at the project before they submit their actual bids for the work. So we anticipate the bidding process to be done at the end of this month. We'll select our group, and again, we'll put out guidance on exact timing, but we anticipate mobilization as early as early January.
Right. Okay. And so on the back of that, how long is it going to take you to be kind of running at full capacity?
Again, we'll put out proper guidance, but assuming we had mobilization beginning January 15th, you got to do some drill and blast work. The mobilization is actually not that big of a job. Um, we got to do some drill and blast work and some um, blasting. I would call our first blast really when things are up and running. We're targeting February for that to occur.
Right. Okay. Why I'm asking this, or why I'm where I'm going with this really is because you mentioned that you're again fully permitted, fully financed, debt free. You know what you're doing. You have the plan. You're ready to go into production, but still, you're trying to go from now a small stockpile leach to a fully operational mile within the next 3 to 6 months. What do you foresee, or what I'm really looking for is the biggest challenges? What do you think are going to be the biggest challenges on your road to that milestone?
One of them, as I mentioned, is crushing material. So we've got actually an expert on site this week to evaluate the contractors that are on site right now to look at ideal blending. Um, that'll be mitigated when we're actually mining. So we're in what's called a high sulfidation epithermal gold system. High sulfidation means that there is a whole lot of sulfur, but also a lot of temperature in the mineralizing fluids and the altering fluids. In the core of the deposits, you get a very, very silicious, very hard material, very brittle. Then at the margins, you get a lot of this extreme clay alteration. So when we're actually mining, we'll have a nice blend of the silicious material, clay material. So we'll be able to effectively control that to the best of our abilities. The other potential concerns that are out of our hands are contractor efficacy and their ability to execute to the plan. But we're working with some very reputable groups that are working on projects like Caliber's Pan, McEwen Mining's, what's his project in the States? I can't recall the name of it, Gold Bar. But we're working with groups that operate for big companies. They have standards and they look to make money. If they're not operating effectively, they're not making money. They don't want to be there. So that's one of the risks I don't really see being an issue. Weather could be a concern. We're restarting a mine in January, February, which anywhere else in the world would be very scary. In that part of Nevada, we get maybe 2 or 3 snow events a year. We just had one last week, got about two, or actually this week, about 2 feet of snow. It'll be gone by Saturday. It really, the sun is pretty darn hot in the desert there. It melts things quickly. So that could be a potential concern. Cost overruns is always an issue when you're starting a mine. But again, we've got a nice enough cushion, plus the revenues coming in that I'm quite comfortable with our bank balance.
So you don't think you're going to have to raise money again before you're actually making money?
We don't need to, but I will speak to that because I'm sure your listeners would like to hear our thoughts on that. Look, our stock's done super well. Right now, we're putting all of our dollars into production, into getting this mine up and running. If we keep going up and we get a big fund saying, would you take $10 million? So let's say if we're above $2 or so, I think I'd be pretty stupid to say no to that if it can actually um, if it can go towards growth and exploration and advancing the assets or buying some equipment that can then drop our costs, I'd certainly consider it. So we don't need the money. We don't need to take on debt. I've been turning down debt left, right, and center because everyone, whenever they hear mine restart, thinks here's a good opportunity for us to make some cash. So we've been turning down financings. As you can imagine, with the run that we've had on the share price, a lot of the bankers are looking to make some money, which is they do that too.
That's why they
But
live.
yeah, like if we have a good opportunity with the right people and our share price is looking healthy, would I consider it? Absolutely. But
Mhm.
have I turned down money lately quite regularly? Yes.
What about a strategic, someone who's operationally strategic or something like that? Is that something you'd pursue?
Yeah. I wouldn't necessarily even want money from a strategic. What I would be keen on is an equity position granted through an acquisition. So one of the last remaining unknowns to the market is the portfolios of producers. There's assets in a lot of these different companies that people haven't seen for 20 plus years that are just sitting on the back of the shelf, dusted, not big enough for majors, even mid tiers. So there's opportunities, and that's certainly a path that we're looking at, Antonio, is potentially doing something like that where we could grant a major a nice equity position and maybe raise a bit of money on the backs of an M&A deal. But
Mhm. So,
I
so get a new project from a major, paying for it in a combination of shares and cash. Then.
potentially, yeah, that would be something we'd absolutely consider. And to your point that in that we're not looking for strategics, our meetings, let's say at Beaver Creek, which is where the real strategics meet juniors occur, um, we actively did not seek out strategic investments aside from a few that had some projects that were of interest to us. So we were focused solely on shareholders' funds, prospective
Mhm.
partners, but yeah, we're not looking, and that's kind of that to your our first, I think, sentence of this discussion is we're not looking for a buyout. We're not looking for someone to take 19.9 with an eventual take us over sometime soon. It would be strictly an equity position, and maybe we can get some technical insights. But yeah, it's not of major interest. Like we've got Rob McEwen in there, we've got Eric Sprott in there, we've got some big players already that I would consider strategic and can provide advice and technical support as well.
And but staying on this topic of financials,
Mhm.
if you go through it the way that you're describing here, when do you think you're going to be consistently profitable? Is 2026 going to be a profitable year for you? And what's it going to take for you to keep that up?
Profit's a funny word, but it will be a free cash flow. Fingers crossed. It should well be a free cash flow generating year.
Hmm.
If we look to true profit, we are going to be advancing our Sandman project in well throughout 2026. Right now, as mentioned at the beginning, we're working on a PEA, PFS in 26, targeting potential permits in 2027, with potential construction in 2027. So there goes most of your profit out of the balance sheet,
Mhm.
depending on how you structure that construction. We pick up another asset. Again, a lot of our capital and cash will go into um, growth. I think until you get to a certain size and a certain platform, I think true profit in mining is hard to come by for the first 5 to 10 years of a producer's growth trajectory. So I think we're going to see real revenues and real free cash flow, but I think we'd be prudent and wise to use that cash to grow the company into a bigger story.
Name of the game stays growth, though. That's what I'm getting from you. It's not, you wouldn't be looking to do a dividend or an NCIB.
No interest. One of the companies that I love that did such a cool job. I'm not sure if you've heard of Fortitude Gold before.
Yeah.
They're a neighbor. They such a cool, unique way of operating as a junior. They were paying the gold. I think it was a gold dividend, a really healthy dividend. they have been in a little bit of trouble lately because their Isabella Pearl mine is I don't know what the status of it is, but I think just looking at press releases, being nearly depleted. They've been waiting on a permit for another asset. And the challenge is when you're a dividend payer, the second you stop paying dividends, you really struggle. Um, and for them, I think they were kind of forced to continue producing, maybe if it wasn't necessarily all that profitable to maintain that structure. And I think they like honestly wicked market. Like when you look at the market cap where their stock was, beautiful idea. They it was a really, really effective strategy, but unless you have sustained long life production, it can be a little bit daunting. So I'd rather see that cash be put into growth rather than dividend. If we make some gangbuster discovery and get into 20, 30 ounce per ton material, like the Father's Day vein in Australia, maybe we do a special dividend or something. But I think it's going to be several years before shareholders would see a dividend at a Borealis.
I do want to talk about that growth, and I'm going to get to it here in a second. But just staying on the topic of challenges, do you have you come across since last we spoke, which is again early on in your public journey, but any legacy issues or challenges with the historic heap leaches or waste rock or old pits or anything that could end up costing you money either directly as a cleanup or in the form of some kind of a bond or something like that?
Nothing crazy. We have had to drain one of our ponds, which was quite an endeavor to repair our pond liners. We did that last, I think around this time last year. We're in the midst of repairing a portion of the underused the portion of our heap leach pad that's not in use. There's some repairs that we actually approved yesterday in our invoice meeting. Um, there might be some geotechnical issues, but really nothing that we've seen, and we've got some geotechnical studies underway at the moment. Uh, Really nothing. The plant needed some real TLC. We replaced all the pumps that are the main driving force of a heap leach operation as recently as 4 or 5 months ago. Um, we're going to upgrade our furnace at some point. Our tanks, so our carbon columns, we had to essentially drain, reline. We announced that last, I don't know, 8 months or so ago. The nice thing is we sold all of the used carbon fines from that. Nothing that scares me, Antonio. Just things that had to be fixed and repaired and replaced. But
And you
it's a
have
new.
already had to put up a bond, I think. Just looking at the older financials, there seems to be some kind of a pretty big one actually on there. What's that about?
I think on the books it would show about 13 and a half, or sorry, about 12 million or so. That was bumped up recently. So we announced, I think it was the 24th of October, that we had received our modified permit, which allowed for some expanded um, the disturbance, but basically bigger pits. And there was a bond increase associated with that of about 2 million. So I think we're around 13 and a half million US. We don't actually put that all up as cash. We utilize a bond insurance company. So we put up 20% of the overall bond into a bank account that we can't touch. And then we pay interest in the order of, I believe, 3% per annum on the overall bond number.
Hmm.
So if
Yeah.
it takes 20 years, it'll end up being more expensive doing it this way, but to save capital and maintain your structure, it's quite effective.
I'm really asking this, Kelly, because a lot historic mines will have many potential pitfalls and stuff like that. And in your case, given the history of the mine with, it was less than ideal management decision making at the time, and then a bit of a hot mess in the aftermath of that, I think maybe even still ongoing. Has anything else come up for you, like either on paper or reality that's connected to the historic closure of the mine or whatever that situation was there at the time?
So just for context, the mine was completely rehabilitated. It was actually one of the first sites in Nevada that had undergone modern remediation in 1993. And that was Echo Bay, who ended up being Kinross, I believe, or I think Kinross. Um, it was rebuilt completely in 2011. So the mine, although it is an older site, it is a newly built site that hasn't been in operation much. So the actual build out is recent. Everything's done under modern standards. In terms of, are you talking about the lawsuits and all that stuff that
Yep.
occurred?
Yep.
Okay, so that we are completely free and clear of. The lawsuits are with the vendor of the asset. We acquired a subsidiary. Um, we did a lot of homework on this in our acquisition. We spent a lot of time and a lot of money with some very expensive lawyers out of the States who really dug into the idea. Some of our board members, before even joining the company, actually did their own individual research to ensure there weren't any potential liabilities. So we haven't heard from the previous company. I don't foresee anything happening with that.
Right. Would you think you're gonna have to work on an economic resource or an updated resource like a PE or an updated PFS on Borealis anytime soon, or are you just going for the production here?
Well, yeah, I would like to get something out to market. It's challenging. So I've done as we meant, or as you know, I've been marketing a lot, and some of that marketing's been to different banks and different funds, bigger funds. Right now, a lot of our investors are not small funds. We've got some huge funds that own the stock, but going to, let's say, like Franklin, like these huge big boy BlackRock groups, they need quantitative data to make their investment decisions. I can tell a good story all I want, but to some of those bigger groups, they need to see clear and concise data.
Hmm.
So as we advance, we're getting there now at $200+ million market cap. Bigger funds and bigger groups are now looking at us. Bigger banks as well, with less flexibility in how they can operate. That's the real driver. Like when you talk about a feasibility study, they always used to be called bankable feasibility studies because that's when you were able to go to the bank and get debt. In our case at Borealis, we don't need it. Um, but I think in 2026 is probably the right time to do it. We should get an updated study out to the market, at least so the analysts are able to effectively tell our story without having to say, well, we think it's somewhere in this range.
Right. Okay. That's exactly why I'm asking. Because I mean you haven't defined, or at least you don't have it on paper where you can go to them and show them like a mining method or recovery flow sheets or an LOM even. But well, can you maybe give me an idea of any of those numbers or an estimate as to what those numbers might look like, even just LOM in the first place? Like how you start mining next year. How long does it keep going for?
So I'll give you an idea of what we've designed for a little minor modification. So about a year ago, gold was starting to trend up. We were seeing 26, $2,700. And I was getting sick of maintaining the asset. It's not cheap. We're 2.5 million at a minimum US to maintain the permits, maintain a staff. It's got to be manned 24/7 to keep the plant running. So we decided to build, and the actual guidelines were let's build a mine plan that will cost us no money to get up and running. So we built a smaller plan. Again, we'll put out guidance, but in that earlier 15 to 25 plus thousand ounce range for about 3.5 to 4 years to get the ball rolling. In terms of LOM, it's much bigger than that, but we don't have a quantitative study to effectively answer that question. But we will be working, as mentioned, to get something out there, which again, the main challenge is for bigger institutions is their NAV models and financial models on the asset. So sorry,
Production
my
costs as well. Like that's something else that I'm thinking about. That's what I was kind of asking about grades and leaching times and recoveries and whatnot. Because
yep,
it maybe put simply, and I understand it'd be forward looking again, but to the
going
best of
crazy.
your guessing abilities here, Kelly, what's the bare minimum gold price that you'd need to run a profitable operation here?
2000,
What's that? I think you cut off.
2000,
Two
2200
thousand.
bucks.
Okay.
Um, yeah, like Right, and right now too, we're planning on doing everything via contractor. So the costs are higher than, or call it, yeah, 2,400. I don't have the numbers off the top of my head. We're using a bit higher of a number as our internal model to design our mine plan, but we will come out with some guidance, and you'll see what those numbers look like. When the mine was built in 2011, gold was probably 1,200 maybe at its height. The pre-feasibility study showed real profitability at those numbers. I think operationally it failed for a number of different reasons, but it should it should make plenty of money
Hmm.
at those levels.
Yeah. Yeah, 2000 sounds good. Does that account for fresh rock and stockpiles, kind of a mix of the two? Or maybe you can talk to me about
Just
that?
the
Like,
fresh. The stockpile will be cheaper, Antonio. It's there's nothing to it. It's already mined. It's already reasonably sized. So if you looked at a projected potential cost for the stockpile, really the only expensive thing is royalties, which um, I've come to learn have incredible torque to the price of gold, which I'm amazed actually at how valuable these royalty companies will be once they start reporting earnings, as a bit of an aside. But yeah, at $4,000 gold, on this portion of the project, we're up to 5% NSRs on the main body.
yeah.
So you're paying 5% at 4,000. So a lot more than we had originally bargained for, but we're also making a lot more money. So
Mhm.
you're sub $1,500 on this stockpile exercise.
So when you talk about free cash flow next year, how much of that cash would be made up by sort of residual leaching versus fresh rock off the bat? Because again, one I guess is more predictable and call it quote unquote safe than the other.
Which, the residual or the
Yeah, yeah.
fresh?
But well, how much of the cash would be how much of the free cash flow would come from the residual?
90% would be from mining.
Oh, okay, that's like off the bat. So the residual would just be something that you're kind of doing as an
There'd
aside, more or
be
less.
another maybe 80, 85, 80%, somewhere in that range. It depends how long it takes us for us to get the gold onto the pad. And also, don't forget too, for you and your viewers, that our financials are a bit askew. So when we're looking to potential quarters that you'll start seeing real revenues and real cash generation. We're July 31st and then every 3 months following. So it won't be probably until about our Q3, which would be filed at some point in the summer, that you'll start seeing significant and meaningful revenues out of the mining exercise.
When we talk about fresh rock, obviously we're talking about oxides here. When you're eventually at the point to move from oxide heaps into deeper sulfide mineralization at Borealis, could that trigger different environmental challenges or if not challenges, maybe
Absolutely.
requirements?
Without question. So the very high level, if you looked at how to process the mineralization at the sulfide mineralization at Borealis, the simplest approach would be build a mill, which we don't have. We've got an outdoor crusher and our ADR plant. Build a mill, put a flotation circuit in. There has been some network done on the sulfides that do indicate it does float. Um, and float a concentrate, drive it down to Hawthorne where there's a rail spur, put it on a rail, send it to Jarrett Canyon or Nevada Gold Mines or somewhere to be processed. As part of the milling and flotation process, you'll end up with a wet tailings. So you'd need a tailings pond or tailings dam. In our case, it'd be a pond most likely, that has acid rock drainage, ARD issues that come along with that. But you have that at Hecla down the road with the Aurora Mine and Mill. You have it at essentially any milling operation. You're going to have a dam of some sort. But in terms of long life legacy, the heap leach pads are pretty easy. They just essentially dry out at a certain point, and your contamination risks 30, 40, 50 years down the line are much lower than with a big raised pond that contains potentially harmful chemicals. So
Right.
that's something to think about, but it's not anything that we're looking at for the next 5, 6 years.
Hmm. What would you have to do for processing? Like, would you have to invest more money into processing infrastructure to handle the sulfides, or how would you deal with that eventually?
100%. So if you went with that simplistic approach, um, which is um, the milling, flotation, you got to build a mill, you got to put in a flotation circuit, you got to put in the infrastructure associated with that. You've got to put in potentially, if you're looking at if you look at our existing sulfide mineralization, the best body is this, we call it the Graben gold deposit that occurs about 120 meters below the surface. We've not done the engineering works, but just on a high level look, it would make sense to mine that underground rather than open pit. So you'd have to put an underground infrastructure. Be looking at $100+ million to get all that put in place. There's other ways you could do it. There's different oxidation processes. There's a lot of different things you can do to effectively strip that, but let's call it 100 to $150 million US, no matter what, to get that material processed.
Yeah, and that's 5 to 6 years away from now. I was wondering why, in the meantime, not take someone over who already has sulfide handling infrastructure. Is that maybe could that maybe be part of the plan? Are there really takeover targets that could help you out with that as well?
There's an easy answer to that. Not, I don't have a CA. I honestly haven't had many real meaningful discussions, but Hecla is just down the road from us. It's, from our front gate, we've got a sign, Borealis this way to our front door, and then Hecla put up a sign 7.35 miles to their front gate of the Aurora mine and mill. That's a mill that has wet tailings facilities. I think you need to add a flotation circuit. They've got what's called a Merrill Crow in place at the moment at that mill site, but potentially there's a deal to be done there. Um, there's mills for sale all the time as well. They're not overly complex. You can just get a modular setup. There's also different processes. Like we've got some met testing underway. I can't say who the group is because we're under CA, but um, they're testing a multi-ton sample of our graben sulfide material to potentially identify a chemical oxidation method. So in that case, what you would do is you'd have your heap leach pad here, and you'd have an oxidation pad over here. So you'd pile up your sulfides. Instead of sprinkling cyanide, you'd be sprinkling this magical chemical fluid that would oxidize that material. And then you would take, after maybe a year or 6 months or however long the residency time would be, you would take that material, bring it over to your heap leach pad, and then treat it like a conventional oxide. So lots of different ways to look into it. We're just kind of starting that, but honestly, our team's heads are pretty much down right now, focused on this restart.
Right.
Once that's up and running, then we'll have lots of time to look into sulfide processing.
And you're also working on Sandman. And in the meantime, I think what's the plan there? How much is it going to cost? What are the timelines? Again, I think you mentioned something about 2027, but worth revisiting here.
Sure. So in terms of what we've been working on, I guess we haven't really announced much because there hasn't been much to announce. But in terms of what we've been doing geologically and exploration wise, we stopped drilling. We announced some really nice numbers in oxides below one of our existing deposits at Borealis. I think it was March of 2025. Stock did absolutely nothing. It's not cheap drilling in Nevada, so we made a decision to stop.
Hmm.
But we did maintain our geological staff. So with two geologists, or three geologists actually, for a big portion of it, really just prospect generating mapping, target mapping, sampling, doing alteration studies, hyperspectral studies. So from let's call it March through to about August of this year, they spent all their time on Borealis, identifying some new drill targets for some potential oxide new mineralization. They've pivoted over to Sandman, so they've been banging around rocks and really getting to know the geology on that project for the past several months, and we're quite excited. So speaking of what we're going to do for growth and development of Sandman, there was a 2023 PEA published. The same author is essentially modifying and redoing that study for us at the moment, so it shouldn't be overly onerous. That should come out soon. We intend to launch a pre-feasibility study following that. We're working on lining that up, but I hope to get that kicked off even before year end, if not January. And in terms of steps to get it into production, the biggest question mark there is metallurgy. There has been plenty of met studies done. Prior to the company that we acquired, Gold Bull, owning it, Newmont owned it, and they did, as Newmont does, a ton of work, bunch of different studies. Their methodology or their thought process was to ship it as a high grade concentrate, similar to what we were talking about with the potential sulphide material to one of their other plants. So a lot of their met work was focused on a much finer grind size than you would typically use in heap leaching. There has been some column leach tests done to test the amenability of the material to heap leaching, and in fact, the 2023 PEA had an external metallurgist that actually increased the recoveries from 70 to 75 based on the studies that were done. But for the pre-feasibility study purposes, we will be doing some met drilling, drilling for basically large diameter holes for the purposes of metallurgical studies. We'll also do some fun exploration drilling alongside that. We've also got to do potentially some additional archaeology, biology studies, although Newmont did a lot of that as part of their property-wide exploration plan of operations. They also drilled water wells. So we've initiated a water well sampling program to get the background for our permits. And the plan, the grand vision is to launch the pre-feasibility study, focusing initially on the detailed engineering that will be required to submit the actual mining permits. I'd like to get the permits off to the government by the beginning of Q2 of 2026.
Mm-hmm.
In principle, this will qualify for the Fast 41 program. We've got a two-phased approach. If you look at the 2023 PEA, or just wait a couple of weeks and look at our new one, it's a two-phased mine plan that was designed. First phase is completely above the water table. It should be very little environmental impact, very little water draw, although the Winnemucca area, even though it's the desert, is actually quite wet. There's a very high water table there. I'm not sure. Yeah, anyways. The first phase will be four or so years. That should be a relatively easy permitting process. Nothing in permitting is ever guaranteed, and it's often slower than hoped for, but our initial discussions are quite positive. So that's where we kind of get our mid 2027, if not the latter portion of 2027 permit grants. Based on the PEA, we're anticipating that it's going to be a basically construction decision on the date of permit grant and then just get the ball rolling. And we should be able to fund that out of Treasury. If we go that route, maybe we take on a bit of debt. It depends how consistent the revenues are at Borealis, but in principle, we should be able to finance that completely out of Treasury from the productions of Borealis.
And because you talk about this sort of hub and spoke model, is the expectation here, and I understand forward looking again, but is it the expectation that mineralogically it's the same type of ore though, so that you can process it at Borealis, or would the processing infrastructure again need an update at that point in the future if Sandman works out?
So the mineralization is a little bit different. It's a low sulfidation gold system, different rocks. The actual heap leaching process, the reagents will be slightly different. The chemistry will be slightly different. But by the time, and what we're going to be doing is building a small heap leach pad, as mentioned, and then, sorry, I'm just going to pop up. Small heap leach pad, a set of carbon columns, and we'll load carbon. As I mentioned before, your carbon gets loaded to 100 to 150 ounces per ton. Once it hits that preferred loaded range, we'll empty the carbon out of the columns, put it into super sacks, ship it down to Borealis for processing. The plant that we have is already set up to process external mineralization. When Waterton owned it, and they did a small phase of mining at Borealis, they were processing ore from Ruby Hill, which is now owned by I-80, while simultaneously mining at Borealis. That's very different geology. Once the gold is in the carbon, the actual rock type itself is completely irrelevant. It's the same process. It's just a pressure temperature, series of pressure temperature changes to strip the gold off of that carbon. So once it's at Borealis, it doesn't matter where it's from. It's just getting the gold off of the carbon grains.
And you'd mentioned that again, the results maybe fell a bit on deaf ears, and exploration in Nevada is expensive, so you cannot afford to, be putting out results that are not appreciated by the market. Are there any other parts of either the Borealis land package or Sandman that you'd consider having, that blue sky potential that is worth that expense? And is any money going into testing some of those targets?
There are some really, really, really great targets at both. So to your earlier question about would I do a financing? What would I do with it? Is it worthwhile? Right now, as mentioned, we're going to have that cash drawdown in the working capital bridge between contractors coming on site and revenues essentially exceeding that working capital drawdown for that month or two. I can't afford to spend much money like with the treasure we have, which is very healthy, to be a conservative and responsible steward. We can't afford to spend a bunch of money on drilling right now. We're doing some confirmatory drilling, but that's part of the mining restart. If we did want to raise some capital, like I said, if we had good people coming in and the share price was high enough, and let's say we raised 15 or 20, 10 million would absolutely go into testing some of these targets. And I think that we would have some joy in that endeavor.
Right.
So if we don't end up, and I'm not looking to do a financing here, but I'm just saying if the opportunity presented itself, that's where the money would go into. And I do think we've got some really amazing targets, and we're going to put an exploration update out probably January once the mine kind of gets up and running with some of these targets. But our team has done a really great job identifying some brand new targets on a property that's been walked around and banged on for the past 30 or 40 years now. We've identified some true new exploration targets at Borealis that have associated grab samples that are looking really good, beautiful alteration profiles. And then at Sandman, the geological the management team, Cherie, who is the CEO, and Regina, who is was the exploration manager, are genuinely brilliant geologists. They had a ton of targets. They just were struggling with cash and a dwindling share price, and not really able to raise the money they needed to effectively test those targets. But there are some really, really spectacular targets at Sandman that we absolutely would like to test.
Mm-hmm. Why I'm asking that, Kelly, is because I want you to talk to me about this again, going back to strategy and what we talked about at the beginning a little bit, but talk to me about how you keep your balance there, I suppose, trying to get, a mine restarted here rather shortly, also working on Sandman, pushing that through, a new project, which even only the latter would be a big deal for any junior out there, and then potentially, doing other sort of blue sky exploration here. How do you divide your time, attention, capital between those different, business lines essentially?
I probably had more hair last time we talked, Antonio, but it's a right, like, so that's a great question. I would say about a year ago, our focus was certainly heavier on the exploration side. With gold moving the way it's moving, it's pivoted quite dramatically into very, very production focused. We have we have a really great group around us, particularly on the banking side. We've got actually I'll name them Russ Mills and Brody Dunlop out of a small shop called MDCP, Mills Dunlop Capital Partners, that present some excellent ideas to us and do a lot of the kind of modeling homework on some of the M&A ideas before we have to sink too much time into site visits. But I would say my time is really spent, a lot of it lately has certainly been marketing, but our team's time is probably 70% head down exploration, 15% advancement of Sandman at the moment, and the balance on exploration.
Yeah. And I suppose that's kind of the eternal and internal struggle there of a junior mining company they have to think about. Would you be looking to change anything else in the meantime before you've gotten into production, like a listing in the US or something like that?
I would love to. So right now we're trading on the pinks, the OTC pink sheets. We actually had engaged a marketing group that did a really good job for us. If you look at our OTC stock chart, we engaged them end of August. We essentially didn't trade a couple shares, not hundreds of shares. We didn't trade it all there. Now we're steadily doing 400,000 shares a day on that OTC platform. I would love this company to be listed on the NYSE American. I think it would be a perfect fit for the platform. The challenge is we're working on it. We're trying to advance to a position where we could get there. There's a few different requirements they have. The easy platform is you have to be, I believe it's above $2 a share US, and a certain market cap. But the funny thing they do is they weigh your market cap less your insider ownership. So in our case, we've got between myself, like our group, and Rob McEwen, there's 25% of the market cap that just disappears, which honestly I find strange. I'd rather have very much aligned insiders than the other way around. But we're working on it. That's the exchange that I would love this story to be trading. I think it would really resonate in the USA. And speaking to like Rob McEwen, for example, he's Canadian through and through. He loves that stock exchange, and most of McEwen Mining's shares are trading through there. Integra, I talked to George, said the same thing. That's the place to be, and that's the place to have a US focused company trading. But it
Not
won't
cheap
happen
though.
anytime. Not cheap, but one of the things that sets Borealis apart from many other companies, even in our peer group and at our valuation level, is our liquidity. So we do about a million to $1.5 million Canadian dollars per day in trading volumes over the past 6 months, including the alternate exchanges, or maybe sub $1 million a day on the main TSX. That brings in a lot of good shareholders. Like you can't get big funds in a name unless there's the chance for them to get out within a month if they take a big position on. So not cheap listing there, but the liquidity that comes alongside of it, I think, is very valuable. We don't market a lot in the States, and that's where this story resonates the best because brokers aren't able to recommend our stock at the moment on the exchange that is listed. So we can only the only people that can play are either funds or retail individuals. And the best thing about the States is these broker platforms. And if you're able to get on, let's say, like Sprott USA out of California, Carlsbad, I can't recall their name right now, Justin something, but if you can get them on your side, that's a network of an insane pool of capital that can get behind your story. So pros and cons for everything, right? Some things are expensive and worthwhile, and as sadly we learned the hard way, some things are expensive and a total waste of time and money. But
Yeah.
I do think it would be a worthy thing for us to get on there.
Well, you said that's one of the best things about the US. I thought the best thing about the US was tariffs, making things easier for everybody out there. Um, G&A, what do you think that's going to be? Again, I wanted to talk to you about the financials. So where do you foresee G&A being once you're actually up and running?
Not overly cheap. So actually, our whole team, thanks to the board, we just increased all the executives across the board. Um, so we were about 2.5 million, I would say, on a G&A basis last year. In 2026, we'll be closer to 3.5 or so. We are traveling, we're marketing. Um, we're reasonably paid across the board. Like I went from 20,000 to a month to 32.5, which is chunky, but I think I've delivered a lot of value. And CFO, COO, VPX went from 15,000 a month to 21 for COO, CFO, and I believe 19 for VPX.
Mhm.
But in line, like we've got a compensation committee. We also started paying directors as of November 1st. So it's, I think, 3,000 a month for independent directors, six for our chairman, and 1,500 extra per committee member.
Right.
And the rationale there, Antonio, is, and again, it's one of these ones that I find doesn't make any sense. Glass Lewis and the proxy firms, as we're getting bigger, we're going to start getting looked at by those guys, weirdly prefer directors to be compensated with cash than with securities, which I don't get.
Yeah.
But yeah, it's definitely moving up in accordance with the market cap.
What are you gonna do for marketing in terms of budgets? How much money do you want to spend on marketing?
Let's say from Jan 1 to end of 26 will definitely be I would say we'll probably end up doing 600 or so on digital marketing, which has been effective for us, and probably another 200 or so in conferences. We'll end up at $1 million, I would assume.
Right. Okay. Yeah. And I hope we're going to be talking a couple more times throughout that process. In the meantime, I'm going to let you go here because I know you only have a couple of minutes. But what's the most fair criticism that you've heard of Borealis since we last spoke?
Why has the stock price remained like this for a year? Because we were range bound for quite some time. I was critiqued on our last financing we did, and people thought it was too cheap with warrants. We did a 56-cent unit with a half warrant at 78 cents for 2 years. Honestly, those warrants all came in, or most of them have come in, and really made the story so much better. Otherwise, we would have had to have raised money to restart the mine. I would have been done at a discount. We wouldn't be trading anywhere close to where we are, I don't think. That's certainly one. Other critiques, where's the resource from bigger people, as mentioned earlier? Um, that's it. I don't have a single unhappy shareholder today, which is really, really lovely. Our board is super engaged. Yeah, really, really nothing. Tony McCooch, when he left, I got it certainly a bunch of questions because he was chair, I believe, last time we'd spoken.
Mhm.
But obviously, with Discovery Silver doing what it's doing, he had dropped off all boards and all advisory positions.
Yeah.
That's yeah, I think we're doing pretty good. I'm very, very pleased with the company, shareholders, support, team, assets, where we're headed, where we're going. Life's pretty good at Borealis.
And I hope we're going to talk again a couple of more times in the future so that I can get questions from people listening and watching for stuff that I might have missed or forgotten to ask you. What's your most fair criticism of me, Kelly? What do you think I forgot to ask? What did you come here hoping to talk about that I failed to bring up?
Well, you said it was going to be a barbecue, and I'm still very much medium, like be it well, I'm blue right now. I didn't get roasted at all, Antonio. So otherwise, I do watch a lot of your interviews. I think they're great, insightful. Um, we didn't talk about permitting water, all that fun stuff, but we can do that again and go into some of those details because that is something that for Sandman certainly is something that
Yeah.
will bring up some questions.
There's definitely a couple of things open on my list as well, and I'd be happy to catch up sometime soon, maybe in the new year, and see how development is going and all that, and then indeed we can talk about water, power, communities, and everything, all the good stuff in the meantime. But I really do appreciate your time. Thank you so much for doing this.
Thank you very much as well.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the management information circular, the financial statements, the management discussion and analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."